Hi there, welcome to the Ecofina Financial Channel. My name is Philip, and as usual, I'll take you through one very important event in the global economy. Remember to click the subscribe button and also like this video. It's very important so that others can also be able to get to see it, and also it will also help this channel to grow. Today, we'll be looking at the oil prices, the global oil prices, and we've titled this, oil prices is near $100, but Nigeria is still having FX shortage. Now what we'll do is we'll try and see why the oil prices are rising so high, and then we'll also try and see why Nigeria is not able to take advantage of this, despite the fact that oil is probably Nigeria's biggest product when it comes to exports. So let's get straight into it. So the global oil price has reached a 7-year high of more than $90 per barrel, because there's really strong demand all across the world. There are a lot of factors driving this. One of it is the rapid recovery from the coronavirus pandemic. Many countries are already lifting bans because many now see the coronavirus as endemic, which means that it will probably never go away. It just has to be managed. So because of that, it's really leading to the opening up of many economies. And with many economies opening up also means that there's very high demand for oil. For all the talk about energy transition, it will still take some time for oil to be displaced as the most important energy product. So the rapid recovery is one of the factors, but also there's been a standoff between Russia and Ukraine, with Russia threatening to invade Ukraine. That is also, of course, added. That has also added to the risk premium on oil, and is also driving the price of oil to a very high level. Now, it's looking like Russia might actually start to withdraw, but still, there's still a lot of risk, and which is why the oil prices are still that high. And when you combine that with how the Organization of Petroleum Exporting Countries, OPEC, is also managing production quota, it's clear to see why that high price might persist, because despite call and demand from many countries that OPEC should increase quota to meet up with demand, OPEC is still going about it in a strategic way, increasing quota just by about 400,000 barrels per day in February, and customers are expecting a lot more. So of course, when supply is not as high as the market, then you can expect that the prices will still keep going high because demand is really high. Of course, one thing I must mention is that of the Russia-Ukraine standoff, Russia, of course, is the second biggest oil producer in the world. And if they go ahead and invade Ukraine, that means that they would probably be sanctioned by some countries in the West, which means, of course, that's going to affect the supply of oil in the market, in the global oil market. So all these things are driving up the price of oil. But interestingly, usually when there's the price of oil is high, Nigeria has always benefited from that, because Nigeria is also a major oil producing country. Oil is the mainstay of Nigeria's economy. And over the years, it has proved very important for foreign exchange earnings. In fact, it is estimated that close to 90% of Nigeria's foreign exchange earnings actually comes from oil. So why is it not all good news for Nigeria, despite the fact that the oil price is at a 7-year high? So we look at some of the challenges, and it's because Nigeria even cannot meet up with the quota that has been assigned to it by OPEC. While Nigeria's oil production was around 1.46 million barrels per day in January, it's still less than the allocation by OPEC, which is 1.683 million barrels per day. So that's a major challenge. And of course, this other challenge is one that has been there for a long time. Is the fact that Nigeria still imports refined oil. which means that out of the FX Nigeria generates from selling crude oil, it still spends a substantial part of it importing refined petroleum products, which is always a challenge, and which is one of the reasons why, Nigeria is not getting the utmost benefit from this. But also important is the subsidy, which right now has been sustained by the government. Initially, the government had planned to take off the subsidy, but with the challenges going up now, the government has suspended that and has even submitted an additional 2.5 trillion naira to sustain subsidy for 2022. But also you have to consider there is the IFX need. Oil seems not to be sufficient anymore to provide all that Nigeria needs in terms of FX. The demand for FX is really large, given that Nigeria is also more or less a country that imports a lot, and that's also affecting issues, affecting many things really. And then when you look at the Petroleum Industry Act, which of course is not going to be fully implemented yet in 2022, especially when you consider that subsidy is no longer going to be taken away, it creates another challenge. It's because foreign investors who have their eyes on the oil industry have been taken aback by the decision to suspend subsidy, and they are not really convinced that their investments will be safe. So investor confidence is not high in Nigeria's oil industry, which is another challenge. And so despite the fact that the oil prices are high, in fact, when you look at the budget benchmark, what the government sets is at $62 per barrel. That's what the budget for 2022 was estimated for, that the oil price would be around $62. And at over $90, Nigeria is still struggling, of course, to meet up with several of its FX needs. And that's a big challenge. The CBN recently announced some measures to try and see how non-oil exports can rise to also help the industry. But it will take a concerted effort. Monetary policy will not be sufficient to solve Nigeria's export challenges or FX challenges. It will take a willing government ready to implement the right fiscal policies to really drive up the non-oil exports and help Nigeria's FX shortage. Again, also, you might want to think that the CBN might want to consider floating the naira, because then probably more investors will be interested in investing in Nigeria, because there will be more certainty around the FX rates and more certainty around how they can repatriate their funds, and probably that might also help the economy. But let us know what you think. Are you surprised that the high price of the crude oil in the global market is not affecting Nigeria's economy that much? And what do you think the government can do, or what do you think institutions can do to help Nigeria's FX crisis? We'll be glad to hear from you, and we'll be back with you next time.